We begin, though, with our talk of the tape. Too soon to declare victory over inflation. Those words today from J.P. Morgan CEO Jamie Dimon. Rates have been moving higher. That's weighing on stocks again. So where is this rally going from here? Let's ask Bryn Talkington of Requisite Capital Management, also a CNBC contributor, right here with me at Post 9. That's what Dimon said. People should take a deep breath on this one before they declare victory, because a month's number looked good. It's perfectly reasonable for the Fed to go to 5% and wait a while. That's what he said. What do you think?
That's what Powell said. That's what everyone else said. It's just the market doesn't believe it. And I think that investors really need to understand this year is that nothing changed with fundamentals so far. It's been pure sentiment and positioning. And Scott, 2022 was all about don't fight the Fed, right? The Fed was well behind inflation. We started the year with zero Fed funds and ended the year close to 4.33.
Well, what happened? Do we have amnesia or something? We forgot?
Well, so what changed? So if you remember late last year, the 2-year went from close to 4.70 to almost 4 starting this year. And the Fed follows the 2-year, and all of a sudden, positioning change and sentiment, because sentiment tells you that the Fed is almost done. And so positioning is this. The CTAs, the hedge funds, and the algos had massive short covering. 2 Thursdays ago was one of the biggest short covering in over a decade. And guess what they covered? High beta tech and tech. And so you've had this huge whoosh on the upside of that short covering. But once again, go back to where bonds now. The 2 years back to what, 4.45?
I just looked at it. It's like 4.47, almost 4.50. I mean, the bond market has moved more into alignment with the Fed. So you're saying the stock market is still in denial? Is that what you're saying?
Well, you're starting to see it not being in denial. And so as the dollar goes higher, as the 2-year goes higher, that's going to call into question this. Once again, this short covering can't be understated. And so I think investors need to be really careful of crowding into names that have already run up, especially the high beta tech. There are a few names that didn't deserve to be that low, but I do think we're going to end up trading down lower. And a lot of these names, like a Coinbase today, I think was down 10 points.
So, but you think that's all this has been? Bear market rally, bunch of short covering, and reality is going to hit us pretty good. It's just a matter of time, right? I mean, that's the Eric Johnston view from Cantor, who I'm not sure if you heard the conversation with Mike Santoli. And he's been on with me numerous times, and the last few, my conviction's very high. Don't pay attention to what the labor market says now. I get it, it's really strong, but it's not going to be 9 months from now, given what the Fed's done.
So here's what's changed, though, because last year, the Fed was not data dependent. They were rushing to do 75, 75, 75. Now, Powell has come out and said we will be data dependent. So there is a shift in Fed policy from being very aggressive to being data dependent. So that is a positive for the market. But I think that a lot of stocks, tech stocks, and certain high growth names have gotten well ahead of themselves, because ultimately earnings and fundamental are what will drive these companies higher mid and long term. So
you don't believe the hype in that part of the trade thus far this year, right? The highly speculative names, the highly shorted ones. You own ARK. So you obviously had a very happy month of January. It was Cathie Wood's best month ever.
Well, we actually sold it. You know, we sold ARK, our final position, late last year.
The whole thing you don't have anymore.
And so, but there are some names that she owns that got overdone. I think Tesla was idiosyncratic. I think Tesla got way overdone on the downside because of the Twitter. I don't think we're going to see Tesla back at 120. I think that was a unique circumstance.
Wait. You're telling me that? So this move from $100 to what is it, like 200 bucks?
Maybe, yeah, 200
in a month. That's justified, but the others are not?
I think that you have individual names get overdone. And so Tesla has real earnings. They have real catalysts. And so I think that's what's really frustrating for investors, is to be able to discern the two. So, I mean, you know, I bought Tesla, but then I sold calls against it, right? Because this is an uncertain market, but I do not think we will see Tesla go back to those 120s unless you have like a market shock that brings everything down.